Hello everybody, welcome back. Good morning. Let's have a look at Bitcoin and maybe a couple of other charts to be fair, but it's just an extension of what I said yesterday and the day before. Nothing special. So we've reclaimed the 20 and the 21 moving average, basically the center of the Bollinger Band. So at this point now you're 65% more likely to maintain this area of the band, being the support that we've bounced on today, 82,800. I'll take a bit of that with the bullish divergence that had been brewing on the daily there and the weekly hidden bullish divergence as well. Maybe this is it. Maybe we do launch a little higher. We've got 86,600 and then we've got 93,000 on the weekly support, resistance there. But most likely we're going to see a move into the death cross, which took place at it took place over here, but the 200 simple moving average, which is uptrending actually, given the fact that this has been such a decent bull market. That's right. It has been, hasn't it? It's not been bad, has it? Let's just face it. It's not that bad. That would bring you to 87,200 or thereabouts. The death cross on exponentials would take place around 85,000 if we haven't reclaimed it, probably by the end of the weekend, by Monday or something like that. But based on what we see right now, every reason to assume we're going to at least move into these areas over here, if not all the way up to the trend line, 92,000. Excuse me. So we'll look at the 4 hourly then. Is the 4 hourly showing signs of weakness? Well, yeah, a little bit. You've got hidden bearish divergence, relatively hot money flow index read, and you're pushing a death cross over here. You've got a green portion of the cloud to begin with. You've got a positive cross down here. You're outside of the cloud. So really what we're looking for now is one last little push above 85,000 to give yourself a pump signal on the 4 hourly. That pump signal will be taking place above all moving averages, and so you would target horizontals. First one being this, 87. Second one being this, 88,003. And then the last one's being all the way up to the 92s, which again is the weekly scenario. It's basically your 20 moving average all the way up here. So look, there is resistance, there is support, there is continued momentum, probably more likely to continue momentum to the upside given the fact that the daily has the hidden bull, the daily has the regular bullish divergence, the weekly has the hidden bullish divergence, and it's only the 4 hourly that's got the hidden bearish divergence pushing into the death cross. So today we might move up, we might move down, we might move sideways basically. We're not really looking for anything spectacular, I don't think, today. But generally, I think today is probably the first day in a little while now that the bulls have actually reclaimed areas of significance that should be continuing. And it wouldn't surprise me at all to see over the next couple of weeks, or maybe even sooner than that, a $10,000 push into the lower 90s, really. At that point, though, you are looking at a big rejection area. So a quick look at the S&P. So the S&P on the daily sort of still hanging around below moving averages that count for anything. Got death cross here, got death cross here, which does it, like I say, invite areas to be retested, and still quite bearish, from its general position. The weekly still again downtrending without any real signs of major life there. I know we've closed here 1.77% up. That's fine. The monthly is one hell of a beast at the moment. And look, if you close a candle like this, so you've come all, we wicked all the way down to these areas, you close up here. Maybe that's it. Maybe this was the wick that the liquidation wick, the major epic wick that everybody's looking for, and the candle close above the Bollinger Band center, 5,300 is great. You're probably only really going to be looking to see a move up to 5,800. And again, there's your moving average, there's 7 simple there, we've lost it, we've lost the 10 exponential as well, but if you go to the weekly, you got the weekly Bollinger Band here at 5,800. So the bears have got control over this chart, just as they kind of still have it over Bitcoin's chart. But we are expecting to see a little bit more reaction off Bitcoin as it is the weekend. And we don't have traditional markets to deal with, and we don't have to worry about all that sort of silliness. So I quite like it. And again, I always have a bullish bias because I still have my overall model that still fits. We've got the Dixie that's dripping down here, so bleeding out basically below all moving averages, way faster than I expected, but generally in the direction that I expected. This was my expectation of Dixie's price action, and I suppose we are fulfilling that. So yeah, all of that looks good. Oil again. Oil had a big drop and then a buyback. That's fine, but we've lost any kind of trend line of significance on oil. So we closed 2% up, but I'm still looking for this to drip down, and live between upper ranges of around 70, 73, lower ranges, to be honest with you, around and perhaps maybe even just below 50. I know. Yeah. So, and that's good for inflation figures, which again will complement Fed's decisions to lower rates, which I think is it's not guaranteed, but is very, very likely. It's extremely likely, basically. All the economic forecasts were way higher than expected. Inflation year on year, they expected 2.6, actually got 2.4. Yeah, pretty sweet stuff. Core inflation, actual 0.1, forecast 0.3. Things are looking up. I don't really get why they don't just focus on the oil chart, to be honest with you, and go, well, how can they not get it right? Right? I'm no economic forecaster, if that's what the word is. But I mean, it seems to me pretty clear and obvious, and has done for a very long period of time, that actually, if you're looking at inflation, you're looking at oil. It's just kind of that simple. I know there's more to it. It's a very complicated balancing act to try and work out inflation. But, I mean, generally speaking, come on, the correlation is, without question, very clear. Oil up, inflation up. Oil down, inflation down. Oil sideways, inflation sideways. Come on, mate. So, yeah. Unless oil does ricochet and bounce and break out and go to significant all-time highs, we're looking at lower inflation. We are looking for the Fed to at least lower those rates to a little bit more, because what's the point? Why would you not? Inflation is this, and so borrowing ought to be at this. I just don't see why you're... Just get with the program, all right, Fed. Just get with the program, right? So we've done Bitcoin, we've done Dixie, we've done oil, we've done S&P. There's not really much else to do. Things look good over the weekend. Again, especially Bitcoin, which has reclaimed these areas on the chart, and those areas that I've specified are the resistances. Like I say, feel free to subscribe, like, share, comment, join the Patreon, do whatever it takes to support the channel. Other than that, I hope you have a nice day and take it easy.